In this video, we're going to be talking about a new stock that I am highly convicted on and most likely going to add into my portfolio. And this stock is nonetheless other than Morgan Stanley, ticker MS. This financial stock has taken a massive hit. Over the past month, it's down 17.14%. And the whole financial sector, and honestly, just the whole market over the past few months is down. So this does not concern me that much. The news on why Morgan Stanley is down is kind of just because of market sentiment, not necessarily intrinsic factors. So this gives me that conviction to buy the dip on this company. Looking on some key factors about it, okay, they have a dividend yield of 2.88%, a price to earnings ratio of 10.61, a market cap of $151 billion. Now they have trillions of dollars in assets under management, but let's go ahead and look at their dividends. Their dividend grades are incredible, okay? Now before we go any further, I ask you to subscribe to the channel, turn on post notifications, and all that good stuff. Dividend safety is an A. Okay, that's incredible. The payout ratio is just below 30%, a 5-year growth rate on their dividend of 26.71%, and dividend growth record of 8 years. Their forward yield is about 3.29% though, which is incredible. Okay, I was doing some reading on Morgan Stanley, and here are a few key things that stood out to me. Trading at a price to tangible book value of 2.02 times, below the industry average of 3.17, looking like a good entry point for investors. And what they've been doing is they've been trying to become less dependent on capital markets and riding out bull markets. So they're trying to bear fruits of company in investing in wealth management and investment management segments, which can still make great income for the company rather than only in bull markets. And with the Federal Reserve signaling a few interest rate hikes this year, this could well benefit Morgan Stanley as a whole. And they've witnessed earnings growth of about 20.2% in the past 3 to 5 years. And I'm not going to lie, they do expect a decline this year because of interest rates rising and kind of markets falling. And they're still kind of getting used to everything. But estimated earnings growth rates promise 5.7% return in the next 3 to 5 years for investors. And that's what expectations are. But it's expected to post $1.95 per share in April 14th of 2022, next month. But this would mark a year-over-year decline of 12.16%, which you don't like to see your companies pronouncing earnings dropping, which is not necessarily the best thing, but I think it's because they're kind of getting used to this economy that we're seeing, and extrinsic factors are causing problems. But long term, I do believe that this company has huge upside potential. Their fair value is about $89 according to Morningstar, which is about $4 that is trading on discount for. And upside potential for price targets is literally 34.26% upside, which is massive stuff, and I really, really like to see that. Their business segments conclude of institutional securities, wealth management, investment banking, brokerage investment advisory services, all of these different things, which are incredible in my personal opinion. So they have a wide variety of things to give. Looking on some key factors we already talked about, they make $8 in earnings per share, $8.03. They only pay out $2.80. There's room to grow, and there's a ton of stuff that this company could definitely put into their dividend growth. Now, looking on some investor presentations, some key things that stood out to me was their revenues have been growing incredibly from 2009. We'll see huge growth. Their return on pretty much the return on tangible equity is about 20%. That's a massive number. Net revenues are just growing incredibly. $60 billion. That's huge on a $150 billion company. Wealth management, look how much assets that they're managing, okay? 4.29 trillion client assets. That's huge. Their new asset growth is about 11% year over year. Investment management assets almost doubled. Okay, assets under management doubled. That's huge. Now reset their dividend while maintaining excess capital. Dividend growth is insane. Share repurchases, we'd love to see that to a certain extent. We're buying in, getting more equity in this company, which is a big thing to see. The dividend growth, if we go ahead and just look at the company's past dividend growth, dividend history, check this out. The dividend growth is insane. 25 cents to 30 cents in 2019 to 35 cents in 2020. And then 2021, 2022, 70 cents. Who knows what the next number will be? That's huge. Now the financials, flawless, okay? Year over year increasing. Really like to see that net income increasing as well. Let's look at their balance sheet just to give it a quick look. Balance sheet, a ton of assets. I mean, there also is a lot of liabilities, but still not worried about that by any means. And the cash flow, this concerns me 2020, but I'm going to assume I couldn't find any information. I was looking it up. My best guess is going to be it was 2020 for the entire year. We still haven't gotten 2021 numbers. I'm assuming that they're positive, and that is an assumption, but free cash flow is negative, and I'm going to assume that was because of COVID and the entire economy crashing and different things like that. But long term, it didn't cause this company any true harm, because if you go ahead and look at how the company has performed over the past 3 months, it's still down. Over the past year, it's up 0.67%, which is not that much of returns, but that's because of this massive. It was up 30%, 28%, and then over the past month alone, it's just fallen. Over the past 5 years, it's still up 82%. Okay, I do believe in the stock for the long term. Looking on some key other factors, profit margin of 25% and an operating margin of 39% is huge. Revenue growth through 7% and earnings growth of 9%. Really love to see these numbers. Expectation for earnings. Revenue is expected to go from $1.23 trillion to $1.27 trillion, which is just crazy to say. And their earnings estimate is about $156 a share, all the way to 175, which is huge. Okay. Now, that's massive. Okay. Keep that in mind. These numbers are huge. And the amount of money that this company can make is incredible. And so I really do believe this company is a strong buy, in my personal opinion. I will be adding into my portfolio. So if you guys keep watch, you will most likely, unless something crazy happens, you'll most likely see this be an addition into my dividend portfolio. But that's going to wrap it up for this video. Wanted to make a little quick one. Thank you for making it to the end. If you enjoyed it, subscribe to the channel, turn on post notifications, all that good stuff. Check out M1 Finance using the link in the description or the pinned comment down below. Sign up, make an account, deposit $50. You get free $50 back. Thank you for making the end of this video, and I will see you at the next one.